Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, daily chart of the ES, and yesterday was a very interesting day. Let's go to 15-minute chart, and we come out of the box, and we broke above my proprietary upper level, but they couldn't hold on to it, and they lost the 67-65 area again, which is denoted there in purple. And then you just saw things accelerate down, and I had circled 1840 for the week as an area where we could bounce. And we did 44. There's a lot of catalysts this week, and I think we're in for a very wild ride. I mean, the bottom line is it's a very big week, and we need to recognize that ready for some real swings. You've got tomorrow's the FOMC announcement. You've got GDP that morning. Thursday, Yellen is giving a speech at 8:30 in the morning, so we're not getting the press conference, but you're getting a speech on Thursday morning. Friday is jobs. So don't get too bullish, don't get too bearish. It's probably going to be a good week to trade. So I mean, we were short for the downdraft yesterday. We were long for the run up. Flat now. And I'm just, we'll see what the day brings. But the reality is there's no conviction up on the highs. The bulls have not been able to make a high and continue to hold those highs for a period of days. This is not 2013. At the same time, the bears have had opportunities to push. They do push, but as soon as the dip buyers come in and they start to feel what maybe be a little bit of a squeeze, they go ahead and let themselves get squeezed out, because it's really the only thing that's been happening to them for the past couple of years. And what you end up with is a very, very sloppy trade. Unless you're an intraday trader, then you end up with some really nice, intraday moves. So I'm still watching 65 to 67. You can see that right here on the open, Globex went down, hit 65, and we have not gone back. I would expect a retest of 65 in the regular session, probably in the morning. If that holds, then there's kind of an anchor you can grab onto with respect to risk and try to go ahead and do something long. Understand that if they lose 65, as they did yesterday, if they lose this range, things tend to accelerate, and you should see 1860, 67 is the daily pivot. You've got middle band here, and let me tighten up on the daily chart. That's not a perfect hammer, but it shows some price rejection down there, and it's a higher low versus here, which I was pointing out to everybody last night. But 82.5 has to go, and it really has to go probably in a walk up to the FOMC. So the bulls need a good day today and a good morning tomorrow to demonstrate that 82.5 isn't a pronounced lower high versus here, versus the 92.5, because that would open up a door now to crack 44. And if you crack 44 now, forget about 40. Now it's all about 44. If you crack 44, you're going to probably go do lower band. It'll push down into that lower band. So 44 has to be the low. 44 has to be the low. Okay? Doesn't mean you can't go down and do matching highs in the low 40s, but 44 really has to be the low if the bulls want to do their ideal, which is to break through 82.5, use a couple of these catalysts, and move up to new highs. The bulls need the reactions to these numbers to be positive. For over a year, every time we've come to one of these big areas, whether it's an FOMC or a non-farm payroll, it's always been the bears need the reaction to be negative. You feel now, though, that it's the bulls that need the news. Otherwise, we just continue to get tired up here with no conviction on the highs. Okay, everybody have a great day. Watch out for that morning dip, and if it holds, go ahead and get involved. I will be back tomorrow morning with another webcast. Have a fantastic day. Trade them well, everybody.